Hey guys, welcome back to another episode. Today we're going to take a closer look at Nvidia. Unfortunately, today we did have a red day. We can see Nvidia was down roughly 3.7% and it's down roughly another 1% after hours. So I'm going to take a closer look at what's happening to the stock right now, why we're seeing some negative impact on the overall stock price. Then we did have some earnings and some companies that deal with the AI market that I believe all Nvidia investors should be familiar with. So let's take a closer look in today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so we can see Nvidia after hours is trading below $1,100. I don't think that's really such a bad thing, as the stock 5 days ago was trading almost at 1,000 and about a month ago was trading at $830. So obviously there's always some time for some pullback. I believe one of the main reasons we're having a pullback today is we did have reports that U.S. officials are kind of reining in AI chip sales to the Middle East by Nvidia and AMD. So based on this Bloomberg report, U.S. officials have slowed the issuing of licenses to chip makers such as Nvidia and Advanced Micro Devices for large-scale AI accelerator shipments to the Middle East, according to people familiar with the matter. The main reason this is happening is there's probably some fears that these chips are being shipped to the Middle East, and then from the Middle East are being sent over to countries that are not eligible or that might have some restrictions from there. So I think this is what's creating the pain right now. I do have this pretty cool presentation to kind of see where Nvidia's revenue is really dependent on right now. We can see most of Nvidia's revenue comes from the United States market, where it makes about $13.5 billion from its most recent $26 billion. Another important thing to note, though, is that this revenue is not necessarily associated with where the product goes, but it's more of where the shipment it's where the customer's billing location is. So for example, most of the shipments associated with Singapore, which is a big portion of this company's total revenue, either end up in the United States or Taiwan. So we can see that even though you might see that, hey, look, this company is really dependent in international markets, it doesn't necessarily mean that that's where the product is being shipped to. So pretty cool there. The other thing I wanted to mention is this is not the first time we're hearing of regulations, right? Back in October 2023 and July of 2023, we did see some restrictions and halt of NVIDIA's AI chip. For example, the A100 and H100 products destined to certain customers and other regions, including some countries in the Middle East. So right now, these chips already needed licensing to be shipped out to some countries in the Middle East. What's really affecting it right now is maybe those orders that have very large AI chip shipments are the ones that are being kind of slowed down right now, so they can do a little bit more research and just kind of more understanding of where exactly they're going to go. But we can see here other countries is such a small portion of this company's total revenue. And I personally believe that right now there's so much demand for AI accelerators all around the world that even if they slow down these licenses to the Middle East, it won't really affect the overall stock price, as we've heard from Nvidia during their earnings call that this is a market where there's still supply constraint and not demand constraint. So as an Nvidia investor, this is not something that I would worry about. Now, the next thing I want to mention, and actually before we take a closer look at the next thing, I do have a new channel where I talk a little bit more about the tech behind semiconductor products and not necessarily the market, right? So I dropped my first video, The Truth Behind Nvidia's AI Chip Shortage. I'll post a link down below. If you haven't, make sure to check it out. Make sure to hit the thumbs up and make sure to hit the subscribe button there.
Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode.
Now, we do have a pretty cool, interesting article from TrendForce where they talk about kind of the CoWoS capacity and a lot of kind of the the market right now for AI servers. So TrendForce believes that the Blackwell platform, based on how far supply chain integrations have progressed, is expected to start ramping up in quarter four, accounting for less than 10% of the total high-end GPU market. This is pretty interesting because based on what we heard from Nvidia's earnings, they were a little bit more bullish on the Blackwell platform for this year. Now, they mentioned that the total capacity of TSMC's CoWoS, which is their advanced packaging, is projected to grow by 150% in 2024 and by over 70% in 2025, with Nvidia's demand occupying nearly half of this capacity. And CoWoS is very, very important. Again, check out that video that I just talked about where you can learn a little bit more about CoWoS advanced packaging. Now, one thing that really got my attention is TrendForce did share a lot of great information about the overall market of who's really buying these AI servers. And they mentioned here in 2023, most of the customers were cloud server providers like your Microsoft, like your Google. They made up 65%, where 12% were server brands, which are kind of like your Dells, your HP, and then 23% was others, which are like your tier 2 data centers such as CoreWeave and Tesla, and sovereign AI cloud supercomputing projects. And that was roughly 23%. So now for 2024, it seems like AI server is obviously still going to be strong by cloud server providers, but there's going to be a lot more demand picking up from the others, which are like those tier 2 data centers like CoreWeave, your Teslas, and other forms of sovereign AI. Is increasing to 31%, and we're also seeing kind of those server brands going from 12% to 19%. Now, a pretty interesting article came out today where AMD, Broadcom, Cisco, Google, HPE, Intel, Meta, and Microsoft are creating what they're called Form Ultra Accelerator Link, which is a form of adding connectivity into the data centers. What this really is trying to do is they mentioned that the first version of this will enable the connection of up to 1,000 accelerators within an AI computing pod and allowed for direct loads and stores between the memory attached to accelerators such as GPUs in the pod. So this is very similar to what NVIDIA has with their NVLink. And remember, with NVLink, NVIDIA says that, hey, look, even though we have thousands and thousands of GPUs, we really won't, because of our NVLink platform, they really act as one super GPU in general. And that's very important for AI workloads. So it seems all these other players can't do this by themselves, and they have to team up to kind of find a way to combat that. So they came up with this UA link. This is definitely something to keep a closer eye on, but remember, it's going to take some time to really see production. They believe that the first version is expected to be available in quarter 3 of 2024. But based on another article, it does seem like this milestone or this kind of networking solution is not going to really be in the hands of customers until 2026. So it definitely provides a lot of time for NVIDIA to continue to innovate in their networking solution, but it's definitely something that investors should keep a closer eye on. Next, we have Dell Technologies. Dell Technologies was down roughly 5% on the market and 17% after hours after reporting earnings. Nothing crazy here. The company did beat on revenue, did beat on earnings per share for this quarter, and now for the guidance, they kind of guided pretty much which was aligned by analysts. Now, one of the main reasons that we're seeing right now is Dell did mention that their quarter profits are expected to be below estimates for the upcoming quarter. And the main reason is AI servers actually tend to have lower margins because of the competitive pressure, because of the higher costs. And this is something that I've talked about, even though I do believe there's some form of growth opportunities for companies like Dell, like Supermicro, the AI server is still a very competitive pressure. So Dell mentions that, hey, look, given inflationary input costs, the competitive environment, and higher mix of AI optimized servers, they do expect their their gross margin rates to decline. And investors who are not happy, all investors, I guess, are thinking, hey, look, AI servers, that means we have higher margins, but that's not necessarily the case, as this is a very, very competitive space. Now, we do have Marvell Technologies, and Marvell is one that I think investors should definitely keep a closer eye on. After earnings, the stock was down roughly 4.5%, but those are levels I believe we were not just less than a month ago, yes, even less than 2 weeks ago, right? So nothing too crazy, but it does seem like Marvell did miss first quarter revenue estimates. However, the CEO does remain optimistic about their overall recovery in the second quarter. So Marvell definitely has opportunities in the AI space, but that opportunity is very small compared to where Marvell makes most of its money right now, and those markets right now are definitely seeing some form of pressure. So that's causing obviously Marvell to maybe miss on revenue estimates. In the long term, though, I am bullish on Marvell, and it's probably one I'm gonna do a deeper dive in. I'm also gonna do a deeper dive on Dell, so make sure to stay tuned. And I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.